Time now for Options Corner. Joining us to take a deeper look at the chart is Rick Ducat, lead market technician here on Schwab Network. All right, Rick, what trends do you notice on this chart?
Yes, United strongly outperforming the industrial sector as well as the JETS ETF, the XLI sector. It's such a broad group, it's hard to make a good comparison here. But, as you said, up 61, 62% so far. And when you compare it to the other airlines specifically, its outperformance really shines here. Delta, Southwest, American Airlines, all kind of lumped together here. But JetBlue is the laggard by far here. And, this is an industry where all the factors are very similar. The cost of fuel, travel demand, etc. These are kind of the same things for all these companies here. If we were to look at the chart more specifically for United, we can see that the 110 area right here, that's where we topped out recently. That was our previous set of highs all the way back here from the end of last year, the beginning of this year here. From there, we had our tariff news shock lows. We have traveled upward here, but that trend line was broken. It's been replaced with a more moderately sloping white trend line here going across these lows. In the even shorter term, you can see here that this trend line was broken off of our recent stalling out area near 110, but we stabilized around 93, our green line here. You can see that was an area where price frequently stopped or consolidated or found some footing back here as well too. So another key price area. So we had a nice move to the upside yesterday, and it looks like we have started to reach some important volume areas here. We can see one of our nodes right here starts to take effect around the 105 area, quite close to our +1 standard deviation channel here. So 1 standard deviation up from our blue linear regression line, our line of best fit. So we can also see that if we were to just look a little bit below where we are now, where things opened up yesterday, our yellow 21-day and orange 63-day exponential moving averages come together within the second volume node here around the 98, 99 level. So that's another notable area of potential support. If we were to look at RSI, our measure of momentum, we can see that we have broken through the red trend line, green trend line still in play, making new relative highs and pushing above that 50 midline. So a more bullish shift in tone for this momentum indicator. If we were to look at our expected move for November 21st, 13% to the upside or the downside is what the options market is considering right now. So the low end of that range, 93, pretty close to that area that we highlighted earlier with our green line there. So some notable price levels to the downside here. The upside's a little bit less clear. 120, 160 is where this tops out for the expected move, though.
All right. Thank you, Rick. That is the Duke of Data himself, Rick Ducat. Now take us through an example trade is Tom White, senior options contributor. All right, Tom, I'm interested to hear your example trade approach, especially because United, we talked about 52 weeks, for instance, and it was a strong performer. It was one of the best performers in 2024. It's higher year to date, but it's not one of the best performers so far this year. Well, how would you approach an example trade?
Well, you have to take a look at what Delta reported last week. The stock popped a little bit, but kind of moderated. So I looked at a complex strategy where I'm going to combine two different strategies to create one. Taking advantage of higher implied volatility in the near-term options. So on this complex trade, if you think the UAL is going to go up, maybe that 1 standard deviation, which is about a plus or minus 5% move, this takes advantage of that. But while also, if the stock doesn't move anywhere and consolidates right here, you can still be profitable. So let's walk through this complex trade that I've got here. It's combining in the October 17th monthly options that expire in just 2 days. We're going to sell an out-of-the-money put vertical. That's neutral to bullish, right? And it allows us to collect a credit. So we're going to sell the 105 or the 100 strike put and buy the 190 or the plain 95 strike put. So a short $5 wide put vertical. That's going to create a credit that's going to help finance the purchase of a bullish call calendar here. So in that October 17th, we're going to sell the 108 strike call, buy the 108 strike call in the October 24th options that expire in 9 days. So a 1 week wide call calendar combined with the short put vertical creates a credit for us. If the stock opens up here about 104, you're going to collect a credit roughly of 20 cents. So what does that mean? Well, if the stock goes down, the break even to the downside is going to be 99.80. That's about 4% cushion to where the stock's going to open up here. Now, it gives you upside exposure where you want it to go up about that 1 standard deviation, which is a 108 level, thereabouts. And that's where you're going to get the apex of profitability, at or near 108. Now, because you collected a credit of it, even if the stock blows through and goes up 2-3 standard deviations, you're still going to get to keep that credit that you collected of 20 cents. That break even 99.80, 4% below the current share price. Where do you lose? That's going to be down here below 95. You got about $480 in risk on this position, but you're using the short put vertical to help finance the bullish call calendar here, taking advantage of those vol discrepancies.
All right. Thank you, Tom. That is Tom White, co-host of Fast Market, with an example trade there, and senior options contributor with an example trade there for United Airlines.